Hello everyone and welcome back to Call in Investing. Today we're doing a deep dive stock analysis focusing on two companies that have been making waves, SoundHound AI, ticker symbol SOUN, and Pinterest ticker symbol PINS. We'll be dissecting their recent performance, digging into their financials, and ultimately determining if their current valuations make sense. So, consider this a journey through the numbers to assess their investment. Let's begin. So, SoundHound AI. The stock is taking a beating, plummeting 50% year to date in 2025. This immediately raises a critical question. Is this a fire sale, or is there a good reason for this dramatic drop? To answer that, we need to go beyond the headlines and really dissect the company's fundamentals. We're talking revenue, cash flow, the whole 9 yards. Let us see if this dip represents a genuine buying opportunity or if it's a sign of deeper issues. We will start with revenue growth. Let's dive into the numbers. On the surface, SoundHound's revenue growth looks impressive. They reported $84.7 million in trailing 12-month revenue. And in the fourth quarter of 2024 alone, they pulled in $34.5 million, which is a whopping 101% increase year over year. Looking ahead, management is projecting 2025 revenue to be between $157 and $177 million, essentially doubling their 2024 numbers. Now this all sounds really good with management being very optimistic in their projections, but we have to ask ourselves a question. Can they make a profit? While revenue growth paints a rosy picture, profitability is where the story takes a turn. SoundHound is bleeding cash. We're looking at a negative cash flow from operations of minus 129%. Yes, it is improving. They were at minus 300% in 2023. But the burn rate is still alarmingly high. This isn't money being invested in long-term assets. This is the day-to-day cost of running the business. And to make matters worse, their returns on invested capital, which had been improving, have reversed course, plummeting to minus 160%. This suggests that recent acquisitions might be dragging down their performance, at least in the short term. So the question remains, is the high revenue and predicted revenue enough to cover up these worrying numbers? Let's explore this further by looking at its valuation. So what's the real value of SoundHound AI? Even with optimistic projections, my discounted cash flow model puts the intrinsic value at just $3.88 per share. Compare that to the current market price of $9.91. This is a significant difference. This suggests, despite those impressive revenue forecasts, and me expecting the company to be free cash flow positive next year, the market is likely overvaluing the company, baking in too much future success. It seems investors may be a little too excited about SoundHound's long-term prospects. We must now ask ourselves, is this sustainable? The forward price-to-sales ratio further emphasizes this point. It currently sits at 18.5. Now that is significantly lower than the peak of 50 we saw during the height of the AI hype. But, and this is a big but, it's still on the optimistic side. Remember, even positive future events may already be reflected on the valuation, and that's where the real danger lies. It's easy to get swept up in the excitement of a promising technology and completely ignore the fundamentals. Many investors have made mistakes. They see a revolutionary company and think, this is the future, without stopping to ask, at what price? Don't let the hype blind you to the importance of valuation. So, where does this leave us with SoundHound AI? My recommendation, even after this significant 50% price drop, is to remain cautious. The stock, in my assessment, still appears overvalued. The numbers, particularly the negative cash flow and the reversed progress on invested capital, are concerning. I believe it would be prudent to wait for either a further price correction or, more importantly, a demonstrable and significant improvement in their profitability and free cash flow generation. Remember, investing is a long game, and patience is often rewarded. Alright, let's shift gears and talk about Pinterest. I previously included Pinterest on my list of top 9 stocks to buy for 2025, but the market's constantly evolving, so it's time for a checkup. Is it still a buy? To answer that, we'll be revisiting the key metrics, revenue, user base, and, of course, valuation. Essentially asking ourselves, has the story changed or are we still bullish? We want to assess if the factors that caused us to add the stock to the top 9 stocks to buy are still active. Pinterest's revenue story is one of remarkable growth. We're looking at $3.65 billion in trailing 12-month revenue, which is 4 times what it was in 2019. But here is the kicker. The total addressable market for advertising is nearing $1 trillion. That's trillion with a T. This means Pinterest has a massive runway ahead. They are nowhere near saturating their market, giving them plenty of room to expand. The question now is how they plan to keep their user base growing. So, how are they achieving this growth and tapping into that massive market? Well, it's all about users. Pinterest boasts 553 million global monthly active users, an impressive 11% jump year over year. But even more impressive is their growth in the US and Canada, now at 103 million, up from 99 million. They're adding users in their most valuable market, and that's particularly important when we consider the revenue generated by each user, which we'll dive into next. This difference in user growth is crucial, and here is why. The average revenue per user, or ARPU, varies dramatically across regions. In the US and Canada, that number is $8.19. Compare that to Europe, where it's only $1.12, and the rest of the world, where it's a mere 19 cents. You can see, immediately, why growing that US and Canadian user base is so critical for Pinterest's revenue potential. It's simple. More users in high ARP regions directly translates to more revenue. So this difference shows a strategic advantage. Considering these factors, how does this translate into their overall financial standing? Let's move forward. And this strategic advantage is clearly reflected in their financials. Pinterest's cash flow from operations to sales ratio is a healthy 26.5%. This is up significantly from a negative 10% in 2019. It's a testament to their increasingly efficient business model. Furthermore, their returns on invested capital are outstanding, sitting at 54.5%. This demonstrates that Pinterest is not only growing, but also doing a phenomenal job of generating profits from its investments. So, with these strong figures, how is the valuation looking? Let's explore that. So, with these strong figures, how is the valuation looking? My calculations put Pinterest's intrinsic value per share at $70. Compare that to the current market price of just $32.6. And if that wasn't enough, consider its forward price to earnings ratio, an incredibly low 14.5. All of these metrics point to the same conclusion. Pinterest is significantly undervalued at its current price. You might be thinking, what does this mean for the investor? We'll explore that in the final recommendation. So, what's the bottom line? I am reiterating my recommendation. Pinterest remains a top stock pick for 2025. The combination of strong user growth, particularly in the high-value US and Canada market, impressive profitability, and, most importantly, a significant undervaluation, makes it a compelling buy in my book. It's a company firing on all cylinders, and the market hasn't fully caught up yet, which presents the opportunity. We must seize this window of opportunity. Now, let's dive into the final conclusion. That is all for the analysis of SoundHound and Pinterest. So what are your thoughts? Which of these two companies do you believe is a better opportunity? Are you bullish on SoundHound AI's potential despite the risks? Or does Pinterest's steady growth and profitability seem like the safer bet? Let me know your opinions in the comments. I would also appreciate a like and a subscription. And if you are looking to refine your own investment strategies, check out the link in the description to a book written by a fellow YouTuber, Parkav, detailing his 6-step investing framework. Finally, what other stocks would you like to see me analyze? Let me know below.